Hey everyone, welcome back to the channel. So today was a crazy day in the market. So what we're going to do is take a look at how some of the different sectors in the stock market performed and why it happened. So for a quick recap of what happened, the Dow Jones and the S&P 500 both performed very well. The Dow Jones ended up almost 3% up on the day, S&P 500 over 1%, and the nasdaq was actually down on the day, down 1.5%. And the interesting thing to know is that all the major indexes closed at the lows of their day. So even though the Dow was up much throughout the day, we saw a huge selling right before the close, same with the S&P 500 and the nasdaq. And so what was the reason for this pop in the stock market? It was because we got news of a working vaccine. Pfizer came out with a vaccine that they say is now more than 90% effective. And so this is what the markets were waiting for. It was obvious that everyone was anticipating this. It was just a matter of when, not if. And so today we got that news that there's a vaccine that has an efficacy rate of above 90% 7 days after the second dose. Now, obviously, different industries reacted to this news in different ways. So we saw the classic recovery stocks benefit the most from this, like airlines and the cruise companies, jumping pre-market by over 20%, which is just a huge move. Obviously, investors in those companies think the prospects get a lot better once we have a vaccine. And again, the futures this morning for all of the indexes were up, even though the NASDAQ ended down at the end of the day. So now next we can take a look at the entire S&P 500. And the big thing to notice is that almost all of the down stocks were the large tech stocks, the FANG names, where you have Microsoft down 2%, Apple 2%, Facebook almost 5%, Netflix down over 8%, Amazon down 5%. Even though the markets as a whole had one of the best days they've had in a long time, these huge stocks that make up a very large percentage of the index didn't perform as well. And so a big reason for that is obviously because when we had the shutdowns and when everything was moving towards online, these tech stocks obviously benefited from that. And now we're sort of seeing that reverse where there's the vaccine news, everyone's anticipating going somewhat back to normal. And because of that, these tech stocks that have been propped up on the work from home economy are starting to be sold off in anticipation of that space sort of dying out. In terms of what sectors performed the best today, very interesting, energy was actually at the top of the list, followed by financials. Those are two of the sectors that have been lagging the whole year, while the tech stocks have been on a roll. And if we take a look all the way at the bottom was technology. So again, today was a reversal of what has been happening for most of the year, where we have technology down at the bottom lagging, and we had energy and financial and industrials up huge. This is also the last week performance to energy and financial, both leading those, having very good weeks. And even in terms of the 1 month, again, energy and financial at the top of that list. Now we're going to take a look at what happened in the bond market, because I think that is giving us an interesting picture of what is happening overall. So this is the TYX, and this measures the yield for the 30-year bond. And we had a huge jump today, up 9.5%, where the 30-year yield is now sitting at 1.75%. And this is the highest we've been really since we had the spike up to there in June. But before that, this is February. So this is the highest the yield's been since February. And so conversely, this means that bonds got crushed. If we take a look at the TLT, which is the bond ETF, that was down 2% today. So very big move in the bond market. And again, part of the reason I think financials have been doing so well is because we've been seeing yields going up, and rising yields do help banks make more income from the spread on interest rates. Now, going back to the 30-year yield and how that's looking, this could be bad news for the stock market if this continues. It looks like we've been on an uptrend in yields from August, where we hit a bottom. And if you look out on a longer time frame, the 30-year yield has been in a downtrend for a very long time. Even if we go longer than this, we can go to the 1 month chart. Yeah, it's pretty much been in a perfect downtrend all the way since 1981. So this is a 40-year bull market for bonds, bear market for yields. And I'm someone that thinks this is going to reverse sooner or later. Now, did we hit the bottom earlier this year? Maybe or maybe not, but I do think this is something to keep an eye on, because if we do see yields keep going up, that is going to eventually crush the stock market. As yields keep going up, investors are going to want to dump stocks and buy bonds instead, since they can get more yield in the bond market. And if this continues, it might get to a point where the Fed has to step in and intervene and do some sort of control of the yield curve to prevent this from getting out of hand. Now, in terms of some of the recovery stocks, this is Carnival Cruise Line. Again, the big pop, 40% today, which is a huge jump. but this isn't a stock I would necessarily run into to start buying right now. For one thing, after a huge pop 40%, there usually is going to be some sort of a pullback. It usually just goes straight up after a huge jump like that. And secondly, these companies still have a lot of problems. Even if we do see the vaccine work out and the world return back to normal, these companies are in a much different place than they were at the beginning of this year, where the cruise lines and the airlines, they now have a lot more debt than they did. They've done huge dilutions of their share counts, and most of them are operating a smaller company. Carnival sold off some of their ships, airlines sold off some of their fleet. So all in all, could there be upside from here? There could. I wouldn't expect it to be too great, and I wouldn't think that we're going back to last year's highs for any of these recovery stocks anytime soon, even if we do see a recovery in the travel sector. Now, one of the stocks that I owned had a big move today, Cumulus Media. I just talked about their earnings call yesterday in yesterday's video, up over 11% today. I guess this is what you could call a recovery stock since they are in radio. Even though I didn't just buy them because they were a recovery stock, I bought them because the stock was extremely undervalued, and it still is, had the huge jump today. And this is a stock I'd rather be buying than any of those travel stocks. So watch some of my videos talking about Cumulus if you haven't already. And I break down why I like the stock so much and why I think there's huge upside for the company. You can also take a look at Bank OZK, which is my largest position, up 14% today. So again, the financial sector did very well. Looks like we are seeing potential for breaking out of the downtrend we were in. I don't know if it's going to hold or not, but if yields continue to go up, I would expect banks and financials to continue doing well. And in terms of the financial sector, we can take a look at the regional banking ETF, specifically the KRE. This is an ETF that I've been very bullish on, even though I don't own any of it. I see tremendous value in the regional banking sector, and I am bullish on the sector as a whole. And again, we saw the jump 15% today. So, out of the financial sector, those big banks had a good day, but the regional banks perform even better than them, up 15%. And again, this trend could continue if we continue to see yields rising. Now, last thing we're going to talk about is gold. Gold had a reversal from the past few days where first we saw a pop in gold last week, and now we've seen it dump all the way down again. Today, down over 4%, and I'm still bullish on gold long term. It looks like we're still in that correction going ever since August, so I still expect gold to continue going up. I'm still holding Sprott. In terms of how low gold could go, I could see them going down and touching the 200-day moving average, which would be at around $166, $167 on the GLD. But after that, I would expect to continue the uptrend. Now, lastly, the stay-at-home stocks like Zoom, like Peloton, all these other tech names, all got crushed today. Zoom was down 17%. So I don't own any of these. But if I did, this may be a time where I would think about taking some profit. I think a lot of these names have been bid up to levels where the expectations are unreasonable. And now with news of the vaccine, there's potential for a lot of downside on these stocks, in my opinion. So that's what I think has potential to happen. And that's why I've really been staying clear of these names, because I knew one of these days news is going to come out of a vaccine. And after that, I don't see the upside in the stay-at-home stocks really being there anymore. So that's it for this video. Quick stock market update for you. Let me know what you thought about what happened in the stock market today, if you're buying the tech stocks on a dip, or if you are putting money into the so-called recovery stocks in hopes that the economy returns back to normal. If you like this video, hit the like button to help out my channel, subscribe if you haven't already, and I'll see you next time.